Hello everybody and welcome back to my YouTube channel. I am so excited to have you here with me today. If you are new here, then welcome. My name is Rachel and I am a business owner and I am an accountant, and I am here today to tell you everything that you need to know about directors' loans and directors' loan accounts. It is something that we receive quite a lot of questions on in our chartered accountancy practice, and so I am here today to tell you everything that you need to know. When you are running your very own limited company, there'll be various bits of legislation, buzzwords, or bits of information that your mates down the pub just have to tell you. And you'll be hearing all of this information, but there'll be parts of it that you don't fully understand. Directors' loan accounts, which are sometimes called DLAs, are part of those fuzzy bits for small business owners, and so I am here for you today to demystify it and explain to you in plain English exactly what they are and when we use them. In this video, I'm going to cover off what a director's loan is, when we use a director's loan account, what should a director's loan account contain, why would you take a director's loan, and do you have to pay tax on a director's loan? So let's go. So first up, what are director's loans and what are director's loan accounts? For many people, the first time they even hear the phrase director's loan or director's loan account will be either when they are hopping into accounting software for the first time and they see it on the list of accounts, or they're actually reviewing their set of accounts prepared by their accountant at the end of the year. So accountants use director's loan accounts to keep track of money moving within your business to and from you, the director of the company, that cannot be classified as either a salary, dividend, or expense repayment, or money that you have previously loaned to the company. All other withdrawals that you make from the company that sit outside of those two classifications must be coded to your director's loan account. If a company has more than one director, each director must have their own director's loan account to keep track of the different accounts separately. As long as your personal director's loan account remains in credit, then the company owes you money, and then you don't have to pay any tax. However, if your personal DLA has a debit balance, it means that your DLA is actually overdrawn and that you owe the company money. So this balance is effectively an interest-free loan that you have taken from the company. So this could need to be reported to HMRC as a benefit in kind, but we'll come on to that later. So at the end of your company's financial year, either you will owe the company money or the company will owe you money, depending on the position of your director's loan account. This will then be recorded as either an asset or a liability in your company's financial accounts. So what should your director's loan account contain? Items that you should record or code to your director's loan account are any cash withdrawals that you've made from the company as a director that weren't salary, dividends, or repaying yourself to reimburse yourself for any expenses that you paid on behalf of the company, and any personal expenses that you paid for using the company's card. Business expenses, when you're spending money through the company, must be incurred wholly and exclusively for the purpose of the business, and so any transactions that actually fail this test will be coded to your director's loan account as a personal expense. So next up, we have got who can take a director's loan, and yes, you guessed it, only directors of limited companies can take director's loans from the business. So a frequently asked question that I get asked by accountants when we're training them how to prepare a set of accounts is actually, why would you want to take a loan from the business? And there's actually several reasons why you might want to take cash from your business. For example, covering an unexpected personal expense. The important thing for you to remember as a business owner, if you do have to withdraw cash from the company unexpectedly, is that that money does still belong to the business and is in essence a loan to you personally. This loan hasn't been subject to any company taxes or personal taxes, and so it's our job as accountants to run through this with you at the end of the year. Okay, my next question is, do I need to keep a record of director's loans? And the answer is yes. It's really important that you, as a small business owner, understand that your relationship with the company is completely separate. When you created your limited company, you established it as a separate legal entity, and this means that it has its own statutory rights and obligations and accountability, and so for this reason, anything that is transferred from the company to you as a loan must be declared within the company accounts. Okay, I've saved the best till last, and by best I mean most frequently asked question, and that is, when will I have to pay tax on my director's loan? So if we get to the end of your financial year and your director's loan account is overdrawn, but you weren't really expecting it to be, let's say you made a couple of transfers throughout the year, you maybe took a dividend expecting there to be more profit, but then something happened within your business and the profit wasn't quite there. So we have to take that illegal dividend and pop it into your director's loan account. But for some reason, you weren't expecting there to be an overdrawn loan account at the end of the year, but there is. The good news is that if your director's loan account is overdrawn at the last day of your financial year, if you can pay back your director's loan within 9 months and 1 day of your financial year, then you won't owe any personal tax on that loan. However, if we go past that point and there is still an overdue director's loan account, I just wanted to run through the different types of taxes that you will have to pay on the loan. So any overdue payment of a director's loan means that your company will pay additional corporation tax on the amount outstanding. So for the 2022 to 23 tax year, that amount was 33.75%, which is the higher rate dividend tax. And for the 21 and 22 tax year, that rate was 32.5%. This extra 33.75% is actually repayable to the company by HMRC when the loan is repaid by the director to the company. And for yourself as the director, there may also be personal tax to pay at 33.75% of the loan amount if you do not repay your director's loan. And this is not repaid by HMRC when you repay your loan. A further implication for an overdrawn director's loan account for the director is having to declare a benefit in kind. And then a third and final implication of an overdrawn director's loan account is that the company will have to pay employers' national insurance contributions. So for the 22-23 tax year, that rate is 15.05% of any benefit in kind provided, including the director's loan. So as we've run through, director's loan accounts are there to capture information happening during the financial year and as a stopping point at the end of a financial year to make you as the director aware of what's come in, what's gone out, and what's happened in that relationship between the company and you. For most people, their director's loan account is very fluid. It's mainly made up of any expenses, maybe any personal expenses that they've accidentally paid on the business card, and we tidy it all up at the end of the financial year. However, if you are looking at an unexpected director's loan and you need more information in how to tackle these problems, or if you are looking for an accountant, we would absolutely love to hear from you. So you can use the links in the description of this video to book a meeting directly with me into my diary. Please do let me know in the comments what you thought about this video, and if you have any follow-up questions, I would absolutely love to hear from you. If you liked it, please do give it a thumbs up, and to make sure that you never miss another juicy video like this one, please do hit the subscribe button to be notified every time I release a video. Thank you so much for your time today, and I hope to see you again very soon.